Starting a new business or need financing for a new business, or probably your startup. The new buzzword, new venture capital. How do we finance new businesses? What are the different stages? What are the challenges? Most importantly, what are the solutions? I caught up with the investment banker and a training provider, Mr. Frank Vane, who runs Future Capital out in Sandton. He's also one of the experienced executives out at the JSE, that's the Johannesburg Stock Exchange, formerly from London and is now based in South Africa out in Johannesburg, Sandton. I caught up with him to learn just a little bit more in terms of where South Africa stands with its SMEs and what can be done to uplift them. Take a listen. SMEs are what drive countries like America, but we don't realize in South Africa that it is such an area of potential. And so I was researching and I found, I see the word new venture capital quite a lot. And it's sort of like the buzzword when people start, but also expansion.
So venture capital. Venture capital is it's something that's been sort of missing a lot in South Africa. Right. Let me just give you maybe the stages of funding a company will normally go through.
Yeah.
So a company will this generally probably around 5 stages of financing for a company. So you get the first stage will be, say, the pre-seed.
Okay.
That's really right at the beginning. You need to set yourself up. You need to, if you've got the idea, you probably need to start getting a prototype together if there's a product and stuff like that. So it's the core genesis of the idea. And that kind of funding comes from, your own savings, or can call the 3 Fs, friends, family, and fools. Yes. Yeah, so they will put that pre-seed in. Then when you've now feel you've got something now, your idea seems to take shape, then you go to the seed funding. Okay. So the seed funding now is to maybe make the first product properly, at least, and then try it out, that sort of thing. Maybe even acquire a couple of clients already to show that, there is interest in what you're doing. So that's the seed funding. Then you get your what is called your Series A funding.
Series A and
this is where venture capital. Right. So that's where the venture capital guys in. Still a very new idea, but hey, it looks interesting. There is a product. There are a couple of clients, etc. So it looks like this could be the makings of a winner. Okay, but there's still a lot of stuff to be done. Maybe the product is still under bit of development. You still need to perfect it, but it's working, and people are starting to buy it. But there's still a lot more to do. That's where your venture capital comes in, to really tidy things up, build a client base, right? And then you get what is called a Series B funding, which will still be a venture capital guys. It's just to take the company to the next stage now. And then you get your Series B funding. As your business now grows, you're really pumping, the client base is growing, and you really now need to take to the next level. That's where your private equity come up for your Series C funding. So now your private equity guys. Okay, and so they will probably take out the venture capital guys. They'll get their returns now. They'll cash out. They'll cash out, and your private equity guys will now take over, and they will now put the next lot of money in. Maybe it's for you to acquire even another company to really build scale. Because in 5 to 7 years, these private equity guys will want to exit. And the way they exit is either by listing your company or selling it. It could be that you sell to a bigger buyer or a bigger trade player. That's also how you make money. You might stay in the company along with another big trade buyer, but the private equity guys will exit. So either by selling the company or by listing it. So those are your series of funding. In South Africa, we've always had, there's a lot of private equity money around, and there's a lot of private equity players. Not so much in venture capital. That's really an area which we really need to develop, because they're so very small businesses that are now at the seed stage and need the money to go to the next stage. Now, they now need the venture capital, but it's very difficult to find venture capital still, I think, compared to, say, the US or the UK. There's still very few venture capital funds. It's all private equity.
And in a case like in South Africa, you're saying it's a very important area to develop. Why are we finding that? What are some of the stumbling blocks that you might have picked up? Is it maybe how startups are, the language they speak into potential funders, or is
There's probably a mixture of both. I just think there hasn't been really a culture of funding small companies, doing venture capital funding. There's never really been a culture. There's always been a culture. You build a company up yourself, and once you're now really ready for round C private equity, that will help you take it down to the next level. I don't think we've really had a culture of supporting new businesses. It's always been expectation that, it's you and all 3Fs that will finance it all the way to private equity stage, rather than there being specific funds. Even government hasn't got a venture capital fund, right? Truly. You would have thought the government would have a venture capital fund to at least get small businesses, because that's crucial, right? And go to all big economies, US, UK, 60% of employed people are employed by small businesses. So you would have thought that is where the focus has always been, on the big things, the SASOs, the ESCOMs. Oh, yes, that's where government's focus. They think these big companies employ thousands of people, and that's really where you're going to make a difference with that employment. Well, it's not. Employment is actually with the small businesses, and it's been shown the world over. Majority of people are employed in small businesses, not in. Yes, so ESCOM might have 100,000 people in. But there's only somebody else. But if you go around, and if you count up all the small businesses around, each having 1, 2, 3 people, 5 people, 10 people, and you add those up, you find it's a hell of a lot more than the ESCOM and Transnet and SASOs put together.
And what are some of the results if I would imagine now that the startups and they would only grow to a specific point, and then they're not able to.
They can't go further unless they get that injection of capital. So one thing that has appeared is this notion of behind that with individuals, right? Angel investors, and they sort of starting to look at those early stage companies and to see whether they can put money there. But again, it's still very much focused on the tech thing. Like if you've got a fintech business, there'll always be someone who's, because that's the flavor of the day. Everybody is into fintech. So, you'll find there's a lot of guys who want to give you that money. But start a widget factory is very difficult to It's very difficult to get that seed funding, that venture capital funding for a manufacturing business. A tech business, great, yes, when they love it, they think that's the next thing, that's the next unicorn, could be the next unicorn. So a lot of interest to do early stage funding for tech businesses, not so much for manufacturing or agri.
And those are in such great need.
There's such great need. Not everybody has got a tech business, right? Not all tech, but people know how to make a widget and sell it. All they need is money to set up a factory, and they'll make that widget or that sauce. They'll make that sauce. They need just the capital to buy the bottles and buy the manufacturing plant from China, or get the machinery in, but it's difficult to find.
What can SMEs do to make themselves, I don't know, more attractive, or to
sort of first thing is to get someone to advise you, right? You probably would need someone to really take you under the wing and work with you and say, okay, fine, you need the next stage of funding, right? You need this funding, and let's try and put it together. Because also you need to be able to present yourself. And a lot of the interviewers know how to present themselves, how to present their businesses, and that make it attractive to investors.
What does that involve?
It involves two things. First of all, know what an investor's looking for. And you ask for money, well, why would he give you money? And you need to be able to understand why an investor would give you money. Why? Because number one, well, first of all, it doesn't want to fail. So you need to show why you think your business is actually going to work. And number two, your business work is not enough, right? They're also actually looking for a return and a certain amount of return, right? And so will your business be able to give them that type of return over a certain period, right? So a lot of people just think, okay, he's going to give me money and one day I'll pay. No, these guys normally have timelines at 5, 7, maybe at the max 10 years, right? We need our money back with profit at top, and this is the kind of profit I'm looking for. Okay? So you need to understand that, and it show in your business how you're going to deliver that. So it's not just about to say, hey, look, I'm going to build this widget factory. I'm going to sell it to our guys in whatever. I've got off-takers are going to buy, So yeah, that's a business. I'm going to make a profit. Well, how much profit? And will there be enough to pay me my profit from investing in this company? So you need to understand those dynamics. You also need to understand, and this is also difficult for early stage businesses, right? When you go out for funding, because you're early stage, you're not going to get debt. These guys are going to put equity, which is a problem, because what is your business worth? So you need to be very careful. You know, someone says, okay, fine, I was going to take to set up your business, and I need 500,000 rands for equipment and getting the lease. Okay, 500,000, great, I'll give you 500,000 rands, but I want 40% of your company. Oh, no. Great, okay, no, great, 40%. Get the 500,000 rand. Oh, you know, in a few years' time, this company is worth 50 million, 100 million. You've probably... That guy's 500,000 is worth God knows what. Even 40% is worth God knows how much. You suddenly realize, but I gave this guy too much money, or too much equity. Right? So you need to be careful that you need to strike a balance, because you need to make sure that you give enough equity to entice the investor, but not too much so that you end up effectively giving your company away for nothing. And I'm working with a couple like that at the moment. They sort of ready now, I would say, for Series A type funding, or maybe even Series B. They funded themselves up to now. It's a tech company. They got a unique technology. It seems usually in demand, especially from telecoms companies. And they now really want to take the business to the next level. So I spoke to them initially earlier this year. So we worked on something, but they were worried, and they were quite rightly worried. They said, listen, when we look at this business, they've got some good clients already. They generate some cash. But a small company like the son is a technology guy, the dad is the business guy, and there's another guy, right? But they got a great technology, and they got some great customers. And they said, listen, we're ready to exploit them. We just added something new to our product range, which is very, very much in demand. This thing can really go, but we're going to need money to do it. So fine. But now if you're talking Series A funding, the question is, and that was a problem, how do we value the business? Because if we look at the value now, there's not really much in it. But shit, when we can see where this thing can go, this value is potentially huge. But an investor will say, yeah, that looks great, but you know, it's a forecast. It may or may not happen. All kinds of things can happen. So I want to focus maybe on the value today. I might give you a little bit of extra, but what is the value today? And I'll put my money based on the value today. I'll give you maybe a little bit of an uptick, but I'm not going to look at this blue sky. And, you know, you're telling me this company is going to be worth, I don't know, R1 billion say 10 years' time. I'm not going to pay you R1 billion for that now. Well, I don't know if it will. Could be, but no one knows. I do know perhaps that this company could be worth 100 million. Definitely, by looking at the client base you have, etc., can be worth 100 million in, say, 2-3 years' time. I'm willing to base it on that valuation. So they were worried. They don't know how to value the company. And it is difficult to value. That's part of the problem. It's difficult to value a company at that, and still its early stage, yeah. Okay? because you don't have any sort of proper cash flows yet, and your client base is not fully developed. So how do you rank of it? So what they decided basically is to say, okay, fine, we're not going to go for Series A funding. We'll keep funding it because we're generating some cash flows and we've got some more savings, so we'll keep funding it from ourselves. So next year we'll talk again when they feel they've now built a bit more of a solid business, and when they do projections, they can now start to talk about proper valuations. And hopefully have a valuation that they are comfortable with and an investor is comfortable with. So valuation is a big thing in this early stage companies.
And do we see South African startups spending time to add those aspects into whether it's their business plan? Are they aware that...
No, they don't. Because they're entrepreneurs, right? They just concentrate on making and selling. I need some money. Can I get some money? Well, you haven't done the work to show why should we give you money. Then there's other issues come into play. That's why it's an aspect they should, that these small businesses guys should not overlook. It's not just for the big listed guys. It's very important, especially if you're a small business, to start to get a hand, in terms of, okay, fine, buying and selling, what is it doing to my valuation? If I want to raise money, what's an investor going to be looking at? How should I value my business? If someone comes in now and says, I like this thing, can I buy a stake in your company? Yes, I need the money, but what kind of stake do I give them?
How do you figure that out, actually? You do proper financial.
You need an advisor who can tell you this is probably how you should approach the valuation. This is a kind of number. I'll give you a range, but the bottom and top end. So when guys says want money, you base it on the top end and negotiate. And I'll tell you what you should do. So you should do it, where you should end up at and try and end up at. But you need advice so you can at least have that proper conversation. Yeah. Because there's millions of businesses out there. If I say to them, listen, I've got 500,000 rand a year, what kind of stake will you give me in your company? Then I wouldn't need to give me 10% or to give me 40%. They wouldn't do it. But if they give me 40%, they might regret it 2-3 years later.
That's interesting. Tell me, take it back a bit. Future Capital. What is it that Future Capital does? What is it all about?
So Future Capital really started from the training side. So it goes to my banking background. So it does basically corporate finance type training. So we train new bankers. We train corporate lawyers because they're good at the law stuff. But they don't. But some they don't know the commercial imperatives that drive some of their legal work when it comes to corporate legal work, commercial work, right? Because when you do an M&A, you need a lawyer, right? When you go for funding or a bank, you need a lawyer, right? Who draws up legal agreements, or the bank uses legal agreements. You need a lawyer to look through that for you and make sense of it. So there's a lot of legal work in corporate. But a lot of lawyers don't understand the commercial imperatives that drive some of these things. So I give them the training, so it puts the whole thing in context. And also they can start advising the clients as well, right? So a lot of clients these days would also want their corporate lawyer, to advise them on certain things, financials, rather than going to the bank because they feel the bank has got a bit of an agenda, right? Yes, they got an agenda, they want a deal. Right, they want a deal, so they might not be very, very partial. So they tend to go to the lawyer for the first round of advisory stuff. And now, if you don't understand the commercial stuff that drive these things, that you're not going to be able to advise your client and understand what they're talking about. When you sit in a room and your client is doing an M&A deal, he's got his lawyers there, he's got his bankers there, and they start talking about all types of stuff, you need to be able to give some kind of input. So that's why corporate lawyers go through the training. And then I just train as well just general financial staff. So, for example, trained a lot of financial directors, for example. So you find a lot of financial directors, they're chartered accountants, so they know their balance sheets and stuff, money match. So, and they're financially savvy, but you find they come from an audit background. So they come from an audit background, they get into a company, they're promoted, and suddenly they find themselves as financial director, and then the CEO says, hey, we're going to do an acquisition. They've never done an acquisition. What are the issues around an acquisition? Yeah, so they need that type of training as well. We understand that kind of stuff. Yeah.
There's a growth related.
Yeah, exactly.
And so just the South African climate, when do now, let's say, for example, startups or SMEs, when do they know when it's time to maybe apply or look for new venture capital?
Well, you'll know when your business starts getting constrained, right? When you start building more clients and you have to either buy or build new product, get new staffing, and you realize you haven't got the money. And that is when you start feeling the pain. I need some money. I need another machine. I need 10 more staff. That's going to cost me X amount per month. Those types of things. I need to move to a new building. Now you realize you need money. And so that's one of the things when you have this constraint. Another constraint is also when you start to get yourself in an overtrading scenario.
What's that? What's overtrading?
Which is really the killer of most small businesses. So, they really get entrepreneurs, built his widgets. People love it. Sorry, as a banker, we always talk with widgets, but we don't know how to who can't. And you start selling your widgets. People love it. They buy it. They buy it. They say, hey, ship me 10,000 widgets, please. Customer says, great. Boom, boom, boom. Ship it to you. Customers, I pay 30 days from statement. You give a statement every month. End of every month, it means in 60 days before you get paid, right? In the meantime, we're shipping more. You've got more clients coming in, you're shipping more. So you start having a cash flow problem. Because all your cash is sitting in debtors. All your cash is sitting in debtors, not in the bank. So on paper, you're profitable because your sales are huge. You are a profitable company. Your sales less your cost shows that you're profitable. So you think you're doing great. You look at your monthly accounts, we make fantastic profits. But your cash flow, you've got no cash in the bank because all your cash is sitting with your customers. And waiting for that 60-day cycle to come around. Now you're getting into cash flow problems. And the problem is, when you've got to pay your suppliers, they're probably not going to wait for 60 days. They'll want it tomorrow. Yeah. The tax man wants his VAT. He doesn't have trade from you, right? The minute you submit that bloody when you submit that return, that's the kind of VAT. You made all these sales. That's the VAT you owe me. Can I have it, please? Right. So your tax man say, I want my VAT. Okay. Your staff wants their salaries every month. Yeah. The landlord wants his rental every month. It's not going to give you 30 days. They want your rental, right? So you get into that cash flow squeeze, and very often, because you can't pay your suppliers, you can't pay your rent, what are these guys going to do? You can't pay the taxman, what are they going to do? They're going to bring a liquidation application. And it's been the case for many years that a lot of small companies that go bust, they go bust even though they're profitable. So they don't go bust because they're unprofitable. You go bust because there's no cash flow coming in. The cash flow cycle is all wrong. So when you get in that scenario, the only way to save yourself is to get new cash. You need someone to give you cash so you can pay these guys while you're waiting for that cash to come in.
And this is why most startups, there's such a high percentage of failure. Cash. And then with
Even though the product seems to be successfully selling, but they're not getting the cash in from their clients.
with all these challenges, what would be some of the solutions that you would say, this is what I
I'm actually running a course for one of the banks where I give a presentation to SMEs. And part of that presentation or workshop, so 1 day workshop, and part of that workshop I talk about danger signs and how to deal with them. You know, is your company unprofitable and not making profits? Well, why not? And how do we deal with that issue? So we'll go through it. So if you're not making gross profits, or there's something fundamental with your business, you're not pricing it right, pricing the product right, and get that right. Interesting. So we look at net profit. You know, you're profitable on the gross level, but net profit you're not making it. What's the problem? Okay, so we look at that. Are you generating the right turnover? Maybe it's a marketing strategy you need to do to get more revenues in. Talk about what I talked about now, overtrade. What happens? Everything seems okay, but got no cash in the bank, you're cash flow constrained. What do? Well, some of the solutions we go through with getting an investor. If there's no investor on the horizon, what else can you do? Well, speak to your bank for a start. They might be able to discount your debtors, right? You might be discard your invoices. So using different scenarios. And a lot of them are out there. Just a lot of these small businesses don't know they can.
It's true. Some of this information to me is
if they don't know these things. The bank will take your debtor. So if I run to my bank and say, listen, I've sold all this stuff to Checkers, and Checkers, retail chains like Checkers, one of the things they're notorious for is they take ages to pay. But it's a good client to have, because whatever you're selling them, they'll buy tons of this money. Years. So everybody wants to be a supplier to Checkers, and because they know that they're going to buy tons of my product. And guess what? They're going to take ages to pay. Okay? That's just the way that retailers go. Now, if show my banker, listen, Checkers owe me money. Look at the invoices. They signed the invoices. Are only getting paid in 16 days. Now, a lot of banks will say, that's a bloody good client. Checkers, they definitely got to pay. They're not going to run away.
Okay.
Yeah, they're a good client to have. They are going to take long. So what they will then do is say, fine, okay, take my invoice. How much do you owe you? They owe you R1 million. Okay, fine. We'll discount it for you. We might give you, say, 995,000 rand. Okay? So you pay a bit of cost, but at least you get 950. And some 98,000 rand in your bank account today. Yeah.
It so solves that cash flow.
It solves that cash flow problem. So yeah, now you don't have to worry. So when you get your million in 60 days from Checkers, then you can just give, the bank will just take that and say, fine, if you pay me, the bank would have made a couple of thousand, that's their fee for doing it. But that's how you do it, right? So there's all these schemes and things you can do, but you need to understand when it happens, and you need to understand what's available. What's available out there. Too many small businesses get into a panic, they run around, and they start calling their clients, putting pressure. If with pressure on Checkers, they're going to tell you, what? There are 100 guys waiting to supply me this product. You got in. There are 100 guys behind. If you don't like the way I pay, fine, step aside. I'll call the next one in. So you don't have that power. So guys get into a panic. They start not answering the call from the bank. The overdraft is hardcore. In other words, it's not going down. The bank is now shouting for you to repay that overdraft. Landlord is late with the rental payments. And it just gets too much. Guys just go into a spiral, and before you know it, there's a liquidation application. And your business is dying.
Mom, on the issue of pricing, what impact does pricing have in terms of startups generally have, when it comes to pricing, we are either nervous or would like to be more attractive, and that will always affect how we price. And sometimes I find that startups tend to price a bit low.
Yeah, I mean, there's a common mistake with price low because you want to attract client. And it's not always, it all depends kind of market you're on, right? As startups, do not try to fight on price. That's what I always tell guys, right? Because other people, especially if you're in competition, right? It's a loser's game. To go into a price war is a loser's game, because there are people who've been in that business longer than you, and if they start undercutting you, you're dead. Right? You rather concentrate on other things, on service, how you deliver your stuff to the client. Try and create a niche, because the idea is that what you want to try and do is get to a premium pricing, but be able to justify it. Right? Yes, you don't want to be too expensive. I mean, I face that problem in my business. How much do I charge for my training? Yeah, do I charge low? The other problem is if you charge too low, then your product seems cheap. Yeah. They say, well, how good is this guy really? I mean, it's quite cheap. That's good, is it cheap? So sometimes you actually have to price high, so people say, oh, okay, that's good quality. It must be good quality, just charge that. Yeah, let's go with that. Let's go to that course, because that must be good quality. But you don't want to be too high. People say, forget it. And I can get that course somewhere else for a bit less than that. So it's a bit of a game. You need to see where the competition is, so you're not far off from that. You need to make sure that you don't price yourself too cheap. Hey, there's no glory in a price war. Don't get into price wars. Rather think about how do you charge a premium? Rather than thinking, how can I be as cheap as possible to get business? Well, how can I charge a premium? And what do I have to do to this product to charge a premium? And a good example, many years ago, when I was still working in London, there was a guy who he had a car repair shop. And there was another car repair shop also in the town. And his thing was about, what do I do? What do I do? I'm competing against this guy. Do I cut my prices? But then he's also going to cut his prices. And all he thought was, okay, let me do my service. How can I do different? Instead of cutting my prices, what can I do differently? And so I said, okay, well, what's happening at the moment? I'm open from 9 to 5. What happens from 5 in the evening to 9 the next morning? My shop's closed. All that expensive equipment I have there is standing idle. Why don't I open 24 hours? Okay? Yes, I'll have to get the extra staff and do some shifts. But yeah, let me run 2 shifts. And I'll open 24 hours. And now, when someone wants their car service, what happens when you want your car service at the moment? You get up, you go to the place, give them your car, you have to Uber yourself to work, and then they call you, your car's ready, then you have to make sure if you've got a late meeting, too bad, but you have to rush before they close, you would get your car. So I said, and this is the same in the UK. So I said, well, what if I go to the guys and say, you know what? Go to your work. What time are you home? You're home at 6, okay? I'll be there waiting for you. I'll pick your car up, service it. What time do you go to work in the morning? I'll deliver it to you at work, at home, before you go to work.
Oh yes, value added service.
It's some value added service. Now I don't worry about missing time from work because I have to drop my car off or do it. In the office to go pick my car up. I've got my car during the day because if you lose your car for the day, that's you stuck to the office. You can't go and see clients. Now it's no problem. I get home. My car is taken away, serviced. Morning, I wake up, my car is there, and my day continues as normal. It was actually able to charge a premium for that.
Demand.
For that overnight service. And before all, that other guy was out of business.
Just because
just because you looked at his product, how can I don't want to, first thing you need to say, cutting prices is not the option. So how do I keep my price? And well, even get a better price. What do I have to do to this product? And sometimes it's a very simple thing I have to.
Skills development. We live in these days now. The tech is amalgamating or converging with almost every career field. With fintech, we're seeing it happening. I would imagine a lot of skills or upskilling needs to happen or is happening. What's your take on that?
I mean, if you're talking in small businesses, yes, there is. I mean, I see that with work that I do with one of the banks. And then it's not necessarily the high-tech stuff. It's literally basic levels that skills need to be developed. You know, great entrepreneurs know how to sell things, but they lack the skills on how to run the business. It's crazy. I mean, one business I was working with this bank is one of their clients. Great business, it's growing. It's doing 30 million rands a year in turnover, but they'd never done a budget.
You know what?
They'd never done a budget. Like, how do you run a business if you've never done a cash flow forecast? I said, well, how do you get by? And problem with that, folks, is they're running like a preschool. So they've got all these preschools in branches. And what saves them is that with preschools, what happens? People pay a term in advance. So they got a lot of advance payments.
Okay.
Which makes their cash balance look great.
Opposite to the what?
Opposite to the
Yeah.
So the cash balance looks great. But I said to them, but do you know where you are from a business point? Do you know if each of your schools are profitable? Yeah, maybe. So if someone wants to buy this business and they do a proper assessment of the profitability of your school, of the company, you probably find you're not in that great a state. And they even had to admit, sometimes some months we did dip into our prepayments. Just plenty of cash flow.
Okay.
So you're probably negative cash flow. And what's saving you is because you're getting all these advance payments. That's not a way to run a business.
What are the dangers of that after a while?
Well, after a while, you start running out of room, right? You might do that. But what if people now, and people get pretty tight. They say, oh, I'm not going to pay a monthly, you're not going to pay a month or 3 months in advance. I'll pay on a monthly basis. Now your cash flows are starting to get. Or if you're running a negative cash flow company because you've not paid attention to the business. Now, 5-10 years down the line, you want to sell the business. Someone's going to do a proper assessment of your profitability and your cash flow. It's investment. There's a lot of restructuring that needs to be done. Because, a buyer is not going to look at this and say, oh, it's all right, don't worry about the cash flow, we can dip into the prepayments. No, it's not going to happen. So you're undermining the value of your business for a start.
Really?
Because if your cash flows are not bad there, then your valuation based on the discounted cash flow basis is also good. Wouldn't think it's great. And so you're undermining the value of your business and the potential to put yourself in a big scenario that if things should change and all those prepayments dry up, and you're suddenly now exposed to a negative cash flow situation. What do? You wouldn't know what's going or how to fix it because you've never even paid it any attention.
Onto this about something.
Where's the cash flow leaking? And are we paying too much for our schools in rentals? And are we providing too much for what we are pricing? Are we pricing our stuff correctly? Yeah, we might be giving a premier service, but we're pricing it wrongly. And therefore our cash flows are negative because, pay out so much, but we don't getting enough in. And none of those things you can see unless you do a proper cash flow analysis each of the business, each of the stores.
That's interesting. My second last question, looking at South Africa, we have a model where the big corps are the ones that are running, and you say they make what the economy is, and then our SMEs are down there and there's this like a vacuum, there's like a gap in between. How, let's say you grow an SME in general in South Africa, it grows to the level where now it needs to be absorbed by the different levels of venture capital. What's going on there at that middle gap between the big corps and that large gap and then the SMEs? How are they being absorbed for growth if we have an issue?
Well, that is the problem, which is why you don't have a very thriving small business sector, a properly funded, thriving small business sector. Because if we had, you'll see a big difference in our unemployment numbers. Yeah, our business sector can be much healthier and much bigger than it is now with the right funding support, especially at the venture capital stage. Okay. And it'll have a massive impact. Like I said, most countries, call it Western community, unemployed people are absorbed by small businesses, not the big business. So we focus on the big businesses, but there's not where the employment opportunities are. The employment opportunities are with the small businesses, and there's not enough support for it. And that's a problem we have right now. Our small businesses are struggling. Yeah, many of them are going bust within the first 2 to 3 years.
It's scary.
Yeah, it's scary because there's no real support. There's no funding support. There's no upskilling support, if you like. There's no real support, and that's really an area I think government should pay a lot of attention to. Instead of worrying about the big businesses, creating these massive industries, focus on making sure, and there's great entrepreneurs. Our guys know these things. They're entrepreneurs. Rather focus on giving these guys money, and getting them to start getting to that stage, and let private equity eventually take over. But yeah, get that venture capital in there.
That's great advice. My last question: stock exchanges. When I'm either a young startup or a young person in general, when I have or young business person thinking of what a stock exchange does, I just think big companies, big numbers. Maybe I'm too small. What can or how should SMEs or startups be? How should they be viewing a place like the Johannesburg Stock Exchange? Is there room for them to get advice or development of any sort, or is it a place where just the big?
No, it's perfect. A little place where just the big guys go. There are, like, for example, on the all tax, smaller companies can list that. The JSE's also now started a private placement in it. That looks at funding anything from R1 million to R1 billion, right? Something like that. And so that opens the market for, it's not just the micro enterprise, but what would typically be effectively be an SME, a mid-tier corporate. They're looking to grow, can maybe go to the private placement area for funding. And it's not a JSE that funds it, so they get it together. They're putting the transaction together, but they have a panel of investors, institutions, high net worth individuals, and others, people who are looking to invest in early stage companies,
like those venture capital reports. Oh, it's interesting.
Yeah, like those venture capital guys. Okay. And so there are people out there which can see the potential. If you're getting that early, how much money you can make. Then you, of course, you support small businesses, etc. But yeah, if you can get early with the good ones, you're going to potentially make good amounts of money. So that could be another area. If you have a size that you need that type of funding, right at above, then those are the places to go to. And I'm not sure what the what the minimum turnover is, but for smaller mid-tier companies, you want to list that but that comes with the cost, the soliciting costs, which will produce all kinds of admin to make sure you could use proper financials, UIC or something like that. But if you want to be a listed company, that might be the place to start.
And I would imagine the JSE or the stock exchanges in South Africa, they are aware of this gap where the venture capital is needed or is important to absorb SMEs. Are they aware of that? And is there any...
Well, I mean, they started the private placement precisely because they realized there's a mid-tier corporate level that would like to access funding for growth. And it's not necessarily the bank type funding, because bank have got different criteria for that. So what you need to do is bring in people who are willing to put equity into these guys. With some equity, maybe even some subordinated debt, right? Put that in there and get these guys to grow. And that's why they started the private placement limit.
Interesting. It's very, very interesting. I'd like to see if, are there countries, maybe in the developing world, that have been in the same situation South Africa found itself in or finds itself in, and what measures did they take sort of like to bridge that? Because I think...
Yeah, I think you'll find a mixture of things, right? I mean, you can only look at South Africa. What do we need here? Well, we need funding for small businesses. We need regulations eased for small businesses.
Okay.
Right, where that is really, you can't have, for example, same minimum wage for a SME that should look for a SASL.
I see.
You know,
is that a big thing in this country?
Yeah, it's a big thing. You know, this is quite expensive, especially with small business. You're trying to build something and grow. So it's very expensive to hire someone. If you need to get rid of someone because, you know, they're small, you might say, I need 3 people, and next year, we might need to let go one of those people. That's a whole process, right? A whole retrenchment process. It's the same for Cecil as it is for a guy doing $1 million turnover, right? It's in other words, it's not easy to hire and let people go if business change.
Yes.
Right? So ease up on the regulations for small businesses. Okay. Compliance with stuff. I mean, there's stuff you need to comply with. Paying accountants and this return, that return from CIPC. Now, there's a lot of admin. There's a lot of regulation that small businesses, and it costs time and money. You don't focus on the business.
Yes.
Time and money, you don't focus on the business. So relieve small business on some of these regulations. So just go and do it. Employ people. If things looking good, you need to employ 5 times, fine, employ them. Yeah, if 6 months down the line, things have changed a bit, you need to get rid of 2, that's fine, or 3, fine. Yeah,
true.
But once you've restructured your business is growing again, guess what? You'll employ more people.
Absolutely.
Look to the long term.
Oh, yes.
Yeah. So we need to get out of this mindset and just give small businesses freedom to operate, freedom to operate, and be able to, react to changing business environments, and stop, putting the same sort of regulation that you would for massive companies. They've got the financial muscle to be there, to deal with that. Whole HR division to deal with that. Not only just you don't get an HR division to sort out all it's
true. And then, Mr. Vane, where can people get hold of you if they, I'm thinking the type of business that you're in, if they need your details to get maybe hold of you for your services?
Get me on my email address, frank@futurecapital.global, so it's very easy.
Thank you.
frank@futurecapital.global, that's normally very easy to call me on there. Or even call me on my cell phone, 082-604-5460. If you've got any sort of questions on fundraising, etc., your business is in trouble, how do I get out of it, what some of the stuff you can do, give us a shout.
Thank you so much, Mr. Vane. Thanks a lot. I think this makes for a great article and a great audio podcast, and it's neat to a point. It should take me about 3 days.
Nah, that's fine. That was good fun, mate.
You enjoyed it. I'm glad you did. I was learning all along because I haven't been a finance person, so these new terms are going to be very interesting for me to make them and make captions that speak to each other.
If it's not clear, just give me a shout and I'll tell it.
No, absolutely. I think there'll be much, depending, I know my audience is going to respond to this, and probably going to be entering new territory in terms of going the finance route. It's going to be interesting for me as well.
Cool. All right. Thanks a million. Yeah, I got that wrong.
Of course, no, I'm available this whole week. Okay, fantastic. Thanks so much.